We'll now look at forfeiture of shares. This is an important point of this chapter because most of the exam questions have something to do with forfeiture. So the first thing that you need to look at is what exactly is forfeiture. Okay, forfeiture means cancellation. Okay, cancellation of shares. In this case, when I say I have forfeited my chance, means I have got my chance cancelled. Directors forfeit the shares of the shareholders when they don't pay their allotment money or call money. They become shareholders because they have paid the application money, and the directors allot shares to them thinking that they are going to pay because they have made a commitment when they signed the application form. But for various reasons, some people may not pay. Then what the directors will do? They'll keep sending reminders to them. According to the Companies Act, you are supposed to give sufficient reminders to the shareholder, and if they don't respond, then the directors have no other choice but to cancel those shares. So the directors are empowered by the articles. If the articles is silent, of course, the Companies Act is looking at these matters and gives them the power to cancel the shares. They have to pass a board resolution and say, share cancel. That means whatever money they have paid up till now, let's say they have not paid the call amounts, but they have paid up till share application. On 10 rupees, they paid up till 5 rupees. Another 5 they did not pay. They lose their 5 rupees. They have lost their 5 rupees. That comes back to the company. It's a gain for the company, no doubt about it. Right? So, we are looking at 3 things in this part of the chapter. One is forfeiture. So, what exactly is forfeiture? Cancellation of shares. Then we are looking at reissue of those shares. Reissue of these forfeited shares. We cancel it from one part X and we give it to another party Y. So, we are looking at forfeiture, reissue, transfer. Okay? Who can forfeit? The directors can forfeit. They are authorized by the articles after giving sufficient notice. And as I told you, there are 3 parts. F, forfeiture of shares. R, reissue of forfeited shares. T, transfer of profits on reissue. Okay? Why profit? Because people who have originally paid the amount, that is lost, they lose the money. Company keeps that money. So that is a profit. But that profit is capital in nature, so we transfer it to capital reserve. Okay? So let's start with the forfeiture entry. Okay? For the first time, you are debiting share capital account. When you got the money, you said bank to share capital. When you cancel the share, you will say share capital account debtor. What will you debit against this? The amount they were totally supposed to pay, called up value of the share. If the share was fully called up and it is getting forfeited, then it is equivalent to the nominal value of the share. But if share was partly called up and now is getting forfeited, then you must write the called up value. I'll repeat again. I said if the share was fully called up and you are forfeiting the share, then you will debit the nominal value of the share. But if the share was partly called up, then you will debit only the called up value of the share. How much they were supposed to pay, that will be debited. How much they were supposed to pay on their shares. Okay. For example, Mr. B is holding 500 shares in a company. He has paid 6 rupees. He has not paid 4 rupees. But 4 rupees was never asked. They asked only for 6 rupees. Okay, maybe they have asked for 8 rupees. They don't ask the 10 rupees fully. So now you will debit 500 into 8, 4,000. Because he has not paid, the entire amount that he has paid will be debited. Share capital account debtor called up value. Then whatever the arrears are there will be credited. Okay, but if there is a premium that was unpaid, only if the premium was unpaid, you will debit the premium. I'll repeat, only when securities premium remain unpaid, we shall debit securities premium account. So what are the debits again? First debit is the called up value per share, share capital account debtor. Second debit is for unpaid securities premium, if any. If it is paid, don't touch securities premium. Okay? So we'll say share capital account debtor, securities premium account debtor. Now what are the credits for? Allotment arrears are there, then you will say 2 share allotment. If the call arrears are there, then you will say 2 share call. If you had debited calls in arrears, you can credit calls in arrears here. Okay? So these are the 2 items which they have not paid. What they have paid goes to an account called Forfeited Shares account. So let's go by this example. Okay? Let us say Mr. P. Okay? Mr. P holds 600 shares of 10 each. Okay? Company has not made final call of rupees 3. That means called up value is 7. He paid application rupees 2. Okay, nothing else he has paid. Allotment 3 he has not paid. First call 3 he has not paid. 2 he has not paid. Let's imagine like that. Okay. So what will you debit first? You will say on his 600 shares, called up value was 7. So you will debit 4,200. Maybe the premium was not there. So let's forget the premium now. We are debiting 4,200, not a credit. It is going to be debit. Okay. And there is no premium. So forget it. Share allotment account. He did not pay the allotment money of 3 rupees per share. So I will credit 1,800. He did not pay the first call amount of 2 rupees per share. So this would be 1,200. And what did he pay? He has paid on his 600 shares, he has paid 2 rupees. So that is going to be forfeited. Now you will see the debits are for 4,200. The credits also are for 4,200. So once again, what is the entry for forfeiture? Share capital account debtor, forfeited shares account, securities premium account debtor. I'll repeat again. Share capital account debtor, securities premium account debtor, 2 calls in arrears, 2 forfeited shares. Done? Good. What should have been paid? What was not paid? And what was paid is credited. Okay? Now, some pointers. Shares cannot be issued at a loss. Ultimate loss should not be there. For example, I have forfeited one particular share. I have collected 3 rupees on that share. 7 rupees he has not paid. So next time when I reissue this share, I cannot reissue it for less than 7 rupees because 3 rupees I already have. So the maximum discount I can give is 3 rupees. Discount is not allowed on a share, but for a reissued share, you can charge lesser provided you have the money. Ultimately, it should not be a loss. It can be reissued at a premium, no doubt. If there are people willing to pay for it, why not? Take the money. The profit on reissue is transferred to an account called capital reserve. The nature of the profit is capital. I cannot put it to the P&L. Therefore, it should go to a separate reserve called capital reserve. Now, how do I calculate the profit on reissue? How do I calculate the profit on reissue? Very important part. Understand this concept. It is a very simple concept. Look, let's apply common sense first, okay? The question is, how do I calculate the profit on reissue of a share? Okay, of a forfeited share. How do I calculate the profit? How much did I cancel? How much did I forfeit? How much money did I confiscate from the original shareholder? Minus what was the loss that I made on reissue is my gain. This is the basic concept. How much I originally collected take away what was the loss on reissue. Finally, what remains is mine. Correct? So, I will find out what was the total amount forfeited on these shares. I will divide it by the number of shares forfeited. I will get amount forfeited per share. Okay? I'll repeat that. Right. I said total amount forfeited on the shares divided by the number of shares forfeited. I will calculate the amount forfeited per share. From that, I will take away what was the loss on reissue. Okay. I will say less loss on reissue. Okay. Let's say I have forfeited, like in the previous case, I forfeited 3 rupees. Okay. That means when he paid me whatever amount, 3 rupees per share was forfeited. And the loss I made was 1 rupee. I gave the 10 rupee share for 9 rupee. So my number of profit per share is 2. Number of shares, let us say, is 300. Then my profit is 600. Okay. Once more. Right. I will solve a question. It is much better. Okay. If, let's imagine a company has issued equity shares of 10 each. The amount payable per share was as follows. Application 3, allotment 4, first call 1.5, final call 1.5. 3 plus 4, 7 plus 3, 10. Calculate the capital reserve in each of the following circumstances when X, a shareholder, has not paid the call amounts on the 500 shares. He has not paid this. That means this is what he has paid, 3 and 4. This is what he has not paid. Is this clear? He has paid 3 plus 4. He has not paid the call amounts, means first call and second call he has not paid. So he has paid 7. He has not paid 3. Clear? Identify that first very clearly. Now the questions one by one. What will be the capital reserve? Capital reserve means profit on reissue when all the shares are reissued at 7.5. Okay? If all the shares are reissued at 7.5. So what do I do first? Okay? Case A. When all the shares are reissued at 7.50 each. All the shares means all the 500 shares. So what do? I will say first, amount forfeited per share. What is the amount that he has paid till now? He has paid 7 rupees. So I will say 7. Less. What is the loss on reissue per share? A 10 rupee share was reissued at 7.50. Okay. It was reissued at 7.50. Okay. That means my loss is 2.50. That means the profit per share is equal to 4.50. And what is the number of shares reissued? Number of shares reissued is 500. Therefore, capital reserve is equal to this 500 shares into 4.50. That will give me 2250. This is my answer. So easy, no? All you have to do is to identify what was the amount forfeited per share. From that, you take away what was the loss on reissue per share. What will you get? You will get the net profit per share. Now you find out how many shares were reissued. Multiply the profit per share into the number of shares reissued is the profit that you have made. That is your capital reserve. Let's look at the second case. The second case says when all the shares are reissued at 11 per share. Okay, fine. Now, when all shares were reissued at 11 per share. ठीक है, देखेंगे. Again, very easy. What do I do first? I will find out what was the amount forfeited per share. Okay, amount forfeited per share. That would be 7. On the 10 rupee share, he has not paid 3. That means he has paid 7. What was the loss on reissue? Did you issue it for an amount less than 10? No. So the loss on reissue is 0. That means the entire amount is your profit. Okay? Profit on reissue per share will be 7. Therefore, capital reserve will be 500 into 7, 3,500. But sir, you have issued at 11. What about that 1 rupee? 10 plus 1, 11. 1 rupee goes to securities premium. Okay? Excess over nominal value 11 minus 10, 1 on 500 shares will be securities premium. Is it okay? So easy? No? Now just have to apply this simple concept in this big problems. We'll make it very simple. Okay? Amount forfeited per share minus loss on reissue per share will give you profit on reissue per share. Multiply that with the number of shares reissued, you will get your capital reserve. Okay, so let's look at some questions now. There is a past examination question which I have picked up partly for practice. A. Past journal entries. Okay, fine. X Limited forfeited 300 shares of 10 each, fully called up, held by Ramesh for non-payment of allotment money of 3 and final call of 4. He paid application money of 3. These shares were reissued to Suresh for 8. So let's pass the journal entry because they want journal entries. Okay. So what first case? This one. Okay. Let's pass the journal entry for this. My first journal entry would be for cancellation of the shares. So I will say share capital account debtor. How many shares? 300 shares. What was the called up value? Fully called up. So I will debit 3,000. What has he not paid? He has not paid allotment and call. So I will say to share allotment account. He has not paid on the 300 shares 3 rupees for allotment. To share call. Here also he has not paid 300 shares 4 rupees per share. What did he pay? He paid the application money of 3 rupees per share. Okay, that is going to be forfeited. So, forfeited shares account 300 into 3, 900. Now you see, 900 plus 1200, 2100 plus 900 is 3000. Arithmetically we are fine. Logically also we are fine. What you were supposed to pay totally, what he has not paid, what he has paid. Easy, right? Okay. Now what do? I want to reissue these shares. I want to reissue the shares. I will say bank account debtor. How much am I going to get for it? These shares are reissued at 8 per share. So I will get 2,400. Now I have made a loss of 2 rupees per share. A 10 rupee share, I gave it at 8 rupees. So my loss per share is 2 rupees. What am I going to debit now? I am going to say forfeited shares account. I will say 300 into 2, 600. And 2, share capital. The shares are fully issued. There are 300 shares of 10 each. That is going to be 3000. And the last entry is for transferring the profits to capital reserve. Okay. What was the amount forfeited per share? What was the loss on reissue per share? Therefore, what is the profit per share? How many shares were reissued? 300. 300 into 1? 300. Itna aasan hai na? One more way I'll tell you. If all the shares were reissued, if all the shares forfeited were reissued, the balance in the forfeiture account is profit. Idhar dekho. This is 900. This is 600. So 300. Both ways I can solve it. Okay. So my last entry would be number 3. I will say forfeited shares account debtor 300 to capital reserve 300. Two ways you can do this. One way, go per share basis. The amount forfeited per share was 3. The loss on reissue, 10 rupee share given for 8 rupees, 2. Therefore, the profit on reissue per share, 3 minus 2, 1. Number of shares reissued, 300. Therefore, the profit on reissue, 300 into 1 is 300. That is the one way of doing it, which will help you all the way. Okay. The second way is only situation when all the shares forfeited are reissued, the balance in the forfeited shares account will be taken to capital reserve. In this case, there was a 900 credit and a 600 debit. So 300 is the credit in the forfeitures, debit forfeiture account, credit capital reserve. ये भी हो सकता है. So every problem has got a different solution. You keep working at it. Find out which is the best way you understand and you can express. Okay? Let's go to the second situation. The second situation is 200 shares of 10 each, 7 called up, on which Naresh had paid application and allotment money of 5 per share. Out of these, 150 were reissued to Mahesh as fully paid up for 6 per share. Locha hai. Okay. What was the amount paid per share? That is forfeited by us now. He had paid 5 rupees. Okay. What is the loss on reissue? We have given the 10 rupee share at 6 rupees to one Mr. Mahesh. So we made a loss on reissue of 4. Therefore, the profit on reissue per share is equal to 1. Okay. Now, number of shares reissue is equal to 150. Out of the 200, we have reissued 150 shares to Mahesh at 6. Okay. Therefore, my capital reserve will be 150 into 1, that is 150. Okay? Let's see this. Journal entries. They want journal entries. First, I will cancel the share. Share capital account. Debtor. 200 into 7. 7 rupees were called up. So 1400. 2. Share call account. He has not paid 2 rupees on this. He has paid 5. That means he has not paid 2. 2. Forfeited shares account. He has paid 5. That means he has paid 1000. Our debit 1400, 200 into 7. Our credit 400 and 1000, 1400 matches. Arithmetically, we are right. Second, we have reissued these shares. Bank account data, not all. Only 150 of these shares have been reissued at 6 per share. 900. What is the loss on reissue? That will be debited to forfeited shares account. On the 150, we have made a loss of 4 per share. That would be 600. And what is the face value of the share? To share capital 150 into 10, 1500. Okay? Right. Then finally we will say forfeited shares account, debtor 150 to capital reserve 150. Okay? There is a balance, sir, in forfeited shares account. Yes, because I cancelled 200 shares, only 150 reissued. So 50 shares ka balance to rahega na? No? And then also I have forfeited how much? I have forfeited 5 per share. So 50 into 5, 250 ka balance to rahega. Okay? Now we'll see how to figure it out. One was this method. The amount forfeited per share was 5. The loss on reissue was 4. Therefore, profit on reissue is 1. Number of shares reissued is 150. 150 is the capital reserve. Very simple. I forfeited rupees 1000 on 200 shares. Now I am reissuing only 150 out of 200, 75%. That means 750 I can use as my discount, maximum. But I use only 600 as discount. Therefore, 750 minus 600, 150 is my profit. The balance 250 will remain in the forfeited shares account and that will be added to the paid up share capital in the balance sheet if you want to prepare a balance sheet. Okay, so I'll just put this note here. If you want to note it down, please note it down that balance in forfeited shares account what is the balance? I cancelled 1000. I used only 600 and 150. So the balance is 250. Okay. How did that come about? 50 shares at 5 rupees. 250. Okay. Which is not yet reissued. Okay. Shares forfeited but not yet reissued. This balance is added to paid up capital in balance sheet. If you want to know, जनरल नॉलेज के लिए नहीं है भाई, आपका नॉलेज के लिए है. ठीक है? Now are you ready for one full-fledged question, an examination question on forfeiture and reissue of shares? Here it goes. I'll read the question. PQR Limited issued 2 lakh equity shares of 10 each, payable 10 act as 3 per share on application, 5 including premium on allotment, and 4 on call. 3 plus 5, 8 plus 4, 12, 10 plus 2, 12. Okay. All these shares were subscribed. Very good. Money due on all shares was received except from Mr. J holding 5,000 shares who failed to pay the allotment money and call money, and K holding 10,000 shares who failed to pay the call money. All these 15 shares were forfeited. Out of the forfeited shares, 10,000 shares including the whole of J shares were subsequently reissued to Mr. L as fully paid up at a discount of 1 rupee per share. Past journal entries for the above. Here we go. Okay. First, we have to start from the very beginning. Application. Application stage mein, first entry would be bank account data. Okay. Application was 3 rupees per share on 2 lakh shares. 2 lakh into 3, 6 lakh. 2 share application account. Very good. Very good. कैसे आया? Number of shares issued 2 lakh. Application money per share 3 rupees. 2 lakh 3 rupees. 6 lakh. इसका क्या करना है? I have to transfer it to share application account debtor. The temporary account is closed and transferred to share capital account. Sir, narration लिखेंगे ना? आप लिखो एग्जाम में. क्या है narration? Narration is being application money received on 2 lakh shares of 10 each at rupees 3 per share. हो गया. Second one, being application money transferred to share capital. Finished. ठीक है? Then we will move to allotment. The allotment stage, share allotment account debtor. How many shares? 2 lakh shares. Amount is 5 per share. 10 lakh चाहिए. Okay. 2. Share capital. Okay. 2 share capital. 2 securities premium. Okay. This would be 6 lakhs. This would be 4 lakhs. Okay. Because capital is 3 rupees per share. This is 2 rupees per share. This was 5 rupees per share. Share allotment account debtor to share capital to securities premium, being allotment money due on 2 lakh shares at rupees 5 per share, including rupees 2 as premium. When you receive the money, allotment money, there is one Mr. J. He is holding 5,000 shares. He did not pay allotment money. The total allotment money per share is 5. He did not pay on his 5,000 shares. So 25,000 less he will collect. 10 lakh minus 25,000 less, 9 lakh 75,000. Okay? So you will say entry number 4, bank account debtor. 1,95,000 into 5. 5,000 I don't get. 9,75,000. 2. Share allotment. 9,75,000. Being allotment money received on 1,95,000 shares at 5 rupees per share. 1,95,000 कैसे हुआ? 2 lakh shares were there. J holding 5,000 share does not pay the allotment money. So the balance have paid, 1,95,000 paid 5 rupees, 25,000 of J we did not receive. We were expecting 10 lakhs, we collected 9,75,000. Clear till now? Sure? Let's move on. Entry number 5, we will make the first call. Share first call account debtor. Share first call account debtor to share capital. What is the call amount per share? 4 rupees. Okay? 4 rupees on 2 lakh shares. So 8 lakh. That is 2 lakh into 4. 2 lakh into 4, 8 lakh. To share capital, 8 lakh. Being share call money due on 2 lakh shares at 4 per share. 2 lakh shares at rupees 4 per share. 8 lakh. Okay? When you collect the money, abhi J holding 5,000 shares, K holding 10,000 shares, both totally holding 15,000 shares, do not pay. So you will say 6. Bank account debtor 1,85,000 into 4. 1,85,000 into 4. That would be 7,40,000. 15,000 into 4, 60,000 I don't collect. 8 lakh minus 60,000, 7,40,000, or 2 lakh shares minus 5,000 of J, 10,000 of K, 15,000. That means 1,85,000. On that I collect 4 per share, which also is 7,40,000. 2. Share first call 7,40,000. Now we have made all the calls. Pura 10 rupees, 10 plus 2, 12, we have asked them to pay. J and K have not paid. We are going to forfeit their 15,000 shares. The entire money has been called. So let's start with the forfeiture entry. The forfeiture entry is for 15,000 shares. Share capital account debtor. 15,000 shares. 15,000 is 5,000 of J, 10,000 of K. 1,50,000. Securities premium account. Securities premium account will be debited on forfeiture only when the premium amount is not received. Therefore, I know 5,000 of J. J ka 5,000. I did not collect the securities premium of 2 rupees per share. Okay. So, I am going to debit securities premium with 10,000. Okay. Clear? Share capital account debtor 15,000 shares, 5,000 plus 10,000, J ka 5, K ka 10, 15,000 into 10, 1,50,000. Securities premium account debtor, only J has not paid the premium amount on his 5,000 shares at 2 per share. So 10,000. Okay? Now, who did not pay allotment money? Only J. 2 share allotment account. J was holding 5,000 shares. Allotment due were 5 per share. He did not pay 25,000. 2 share call account. Both did not pay. 15,000 into 4 was not received. So 60,000. Okay. Now, balance is what they have paid to forfeited shares account. Okay. Balancing figure 160 minus 85. Or, how do I do this? J has paid on 5,000 shares the application money of 3 rupees per share. Okay, that is 15. K on his 10,000 shares paid application money and the allotment money per share, not the premium amount, only the allotment money per share of 3 rupees. So he paid 60. That means the total amount here should be 75. Now arithmetically, let's see if it's tallying. Karo beta, calculator nikalo. 1,50,000 plus 10, 1,60,000. Okay. 25 plus 60, 85. 85 plus 75, 1,60,000. Tally. Understood? एक बार और ठीक है What did I debit? कितने shares forfeit हुए? How many shares got cancelled? J 5,000, K 10,000, totally 15,000. Therefore, share capital account debtor 15,000 into 10, 1,50,000. Securities premium account debtor, only J shares 5,000. I did not collect the premium. 5,000 into 2, 10,000. 2 share allotment, only J has not paid on his 5,000 shares, 5 rupees per share, 25,000. That was the allotment due. 2 share call, both J and K, 15,000 shares, did not pay my call money of 4 rupees per share, 60,000. What did they pay? Balancing figure 75,000. Okay? Fine. Now, we are going to reissue these shares. Okay? We are going to reissue these shares. Fine. We are going to reissue not all. We are going to reissue 10,000 of these shares at a discount of 1, matlab 9 rupees. Okay? 10,000 for 9 rupees. So you will say, let's go to a fresh page. 8th question, you will say bank account debtor. You will say bank account debtor 10,000 into 9. 90,000. Forfeited shares account debtor 10,000. Why? 10,000 1 rupee discount per share. 2 share capital 10,000 into 10. Whatever. Okay? This is 10,000 shares into 10, 1 lakh. What? Very good. Abhi, we have to find out what is the profit on reissue of 10,000 shares, not 15,000, of 10,000 shares. Ninth entry, I will say, forfeited shares account debtor to capital reserve. This is profit on reissue, being profit on reissue transferred. We will calculate this. Okay? Now, I'll take a fresh page, fresh thinking. Okay? Calculation of, be with me, calculation of profit on reissue of 10,000 shares, of 10,000 shares. Calculation on profit of 10,000, reissue of 10,000 shares. Mr. J, he was holding 5,000. Mr. K, he was holding 10,000. Let's double check. J, K, 5 and 10. Okay. What was forfeited per share? Okay. Amount forfeited per share. Only application money was paid. Okay. Here only call was not paid. That means if only application money was paid, how much was paid? 3. Call was not paid. A 10 rupee share mein he did not pay. What is the call amount per share? 4 rupees. That means he did not pay. He paid 6. Okay? Right. What is the loss on reissue per share? 1 rupee. 1 rupee. So, the profit on reissue per share. Profit on reissue per share is 2 rupees and 5 rupees. Okay? Now, what is the total profit? Number of shares reissue. The number of shares reissued is 10,000. Okay? And we are told whole of J shares. That means 5,000 of J. But for K it will be 10,000 minus 5,000 already given from J. So only 5,000 was given from K's lot. Okay? Therefore, the profit on reissue 5,000 into 2, 10,000. Either 5,000 into 5, 25,000. What is the total of these two? 35,000. So I am going to credit 35,000 to capital reserve. इतना आसान. Once more, ये calculation को समझाता हूँ once more. The total number of shares forfeited is 15,000. But the total number of shares reissued is only 10,000. So we can calculate the profit only on 10,000 shares. 5,000 of J, 10,000 of K shares are there, but we will issue only 5,000 from K's lot because we want to issue only 10,000, and the question specifically states that we are going to reissue entire amount of J shares, the whole of J shares, and the balance from K. So we are going to issue 5,000 of J, 5,000 of K. Barabar? Right. Now, the amount forfeited per share. Mr. J did not pay anything else but only application money, 3 rupees. So 3 rupees per share was forfeited. Mr. K did not pay 4 rupees on the share of 10. That means he paid 6. Forget his premium payment. That is gap. That goes to premium account. I can't use it anywhere else. Okay. So 3 and 6. 6 minus 1. 3 minus 1, 2. 6 minus 1, 5. This is the profit on reissue of all these shares. Number of shares reissued, 5,000, 5,000. That is 2 into 5,000, 10,000. 5 into 5,000, 25,000. 10,000 plus 25,000, 35,000. That is where I get my profit on reissue as 35,000. Practice this sum. Very easy, very simple. It will become your strong chapter. Practice, practice, practice. Let's do a couple of sums more on issue and forfeiture of shares. Because this topic, as I told you earlier, pakka question for the exam. So make yourself strong in this. Minimum 10 marks, up to 15 marks aa sakta hai. So therefore, let's learn this. And they're easy questions. They're not difficult questions. Like this one, which came for the exam. Fashion Garments invited applications issuing 10,000 equity shares of 10 each. The amount was payable. Application 1, allotment 2, first call 3, second and final call 4. 1, 2, 3, 4. That. The issue was fully subscribed. Areva. Ram, to whom 100 shares were allotted, failed to pay the allotment money, and his shares were forfeited immediately after the allotment. Sham, to whom 150 shares were allotted, failed to pay the first call, and his shares were also forfeited after the first call. Afterwards, the second and final call was made. Mohan, to whom 50 shares were allotted, failed to pay the second and final call. His shares were also forfeited. All the shares forfeited were issued at 9 rupees per share, fully paid up. Show necessary journal entries in the books of Fashion Garments. Ready? 1, 2, 3, 4. Application, allotment, first call, second and final call. Okay. So let's start. What is your first entry going to be? Very simple. My first entry is going to be bank account debtor. Okay. My first entry is going to be, let's take a different color of a pen. Pen का setting निकालो भाई, black दिखाओ. चलो, thank you very much. Bank account debtor. How many shares were there? 10,000 shares of 1 each. ठीक है. Application money is only 1 rupee. Okay. 2. Share. Application account. $10,000. Okay. Being application money. Okay. Let's not be lazy. Being application money received on 10,000 shares. Chalo. Okay, this is done. Now we go to the second entry. What does the second entry say? We transfer the application money to capital. That will be share application account debtor 10,000 to share capital account 10,000 being application money transferred. This is a very simple part all of us are very comfortable with this part, and our troubles will start only after the allotment. No trouble actually. Third, allotment. Allotment money is due. So, due will come first after the allotment stage. I will say share allotment account debtor to share capital account. How much is due? Being allotment money due on 10,000 shares at rupees 2 per share. Remember 1, 2, 3, 4, no? So I will say 20,000 here. 10,000 into 2, 20,000. Now when you receive the money, you are told that Ram, to whom 100 shares were allotted, failed to pay the allotment money. Okay. So I will go with number 4. Bank account debtor to share allotment account. Once again, Ram was holding 100 shares. Okay. So he does not pay 200. That means I got money on 9,900 shares at 2 per share. I was expecting 20,000. I don't get 200. I will get 19,800. Being allotment money received on 19,900 shares at rupees 2 each. Khatam karo. At rupees 2 each. Now, before we proceed to the first call, we got to cancel these shares. Why? Look at the instructions. He failed to pay the allotment money and his shares were forfeited immediately after the allotment. Okay? Therefore, I have to forfeit his shares. I will pass the entry number 5. I will say share capital account. Only forfeiture entry. Share capital account debtor. There are 100 shares. Don't forget that 100 shares, and into 1 plus 2, 1 rupee of application and 2 rupees of allotment was called, 3 rupees was called, so I will debit 300. He has not paid the allotment money to share allotment account. He has not paid on 100 shares 2 rupees, so we did not get 200. But what he has paid only the application money. I will take it to an account called Forfeited Shares account. This is 100, being Ram's 100 shares forfeited on non-payment of allotment money. Okay, so we have finished the forfeiture. Now we can go ahead with the first call. First call was of 3 rupees each. So when you make the call amount due, how much will you call on? Originally, you issued 10,000 shares, but don't forget, we just cancelled 100 shares of RAM. Therefore, officially in our books, there are only 9,900 shares which are alive. Okay, 10,000 shares minus 100 shares of RAM which just got cancelled. So now we are expecting first call money at 3 rupees each only on 9,900 shares. That's right. So let's go with share. First call account. Share first call account. That will be 9,900 into 3. 9,900 into 3. Okay. That would be how much? 300 into 3, 900 I don't get. Right? Okay. So, it would be 9,900 into 3. Okay. So, that would be 29,700. 2. Share capital account. 29,700 being first call money due on 9,900 shares at 3 per share. Now what happens? We are told that there is one Sham who does not pay the first call money on 150 rupee shares. So we are not going to get 450 from him. Okay? So let's have. Okay? That would be bank account debtor to share. Bank account debtor to share first call. How much? You have made the first call money due on 9,900 shares. Now this gentleman with 150 shares does not pay. That means you are not going to collect 450. You are expecting 29,700. You don't get 450. You will get 29,250. That's one way of looking at it. Or 9,900 minus 150 shares will make it 9,750 shares. 9,750 into 3 also will be the same amount. So I will say bank account debtor to share first call. This would be 9,750 into 3. Okay, 9,750 into 3. That would be 29,250 being first call money received on 9,750 shares. Now we have to cancel this 150 shares also, because again the sum says, what does the sum say? That immediately after the first call, on the non-payment of the first call money, even Sham's shares are to be forfeited. See the question paper. Okay. Sham, to whom 150 shares were allotted, failed to pay the first call. His shares were also forfeited after the first call. After that, the second call was made. So let us cancel Mr. Sham's 150 shares. Now, when you cancel Sham's 150 shares, What is the called up value? Everything except 4. That is 1 application, 2 allotment, 3 first call. 6 rupees was called up. How much has he paid? 1 plus 2 paid. 3 rupees not paid on 150 shares. Okay? So, let's go on. It will be number 8. Number 8. Okay? I will say share capital account. How many shares are there? 150. Okay? 150 into 1 plus 2 plus 3. First application, allotment, first call. Okay? That will be 900. That is our debit. 2. Share. First call. This man has not paid the first call dues. The first call are in arrears. 150 into 3, 450. And what did he pay? We'll go to forfeited shares account. Forfeited shares account. That would be 150 into 1 plus 2. 1 rupee of application, 2 rupees of allotment. That he has already paid. That also coincidentally is 450. Being forfeiture of Shams 150 shares on non-payment of first call. Okay? Non-payment of Shams payment of first call of Sham 150 on 3 rupees per share. Now we can make the final call. Share final call account debtor 10,000 shares originally 100 राम ने नहीं दिया 9,900 150 शाम वो भी कैंसल अभी मेरे पास है 9250 ओके सो आई विल से 9250 into 4 okay so that would be 37,000 to share capital account to share capital account 37,000 okay being final call due on 9,250 shares at 4 each. Okay? So we'll collect the money. When we collect the money, we are told that Mr. Mohan, 50 shares were allotted, failed to pay. That means we will collect the money on 9,200 shares. Okay? Right. Wait. 9750. 9750, not 9250. 9750 because 100 and 150, 250 did not pay. So 9750 into 4 is 39,000. Beg your pardon, it is 39,000. Now, bank account debtor. $9,700 into 4. I don't collect 200 rupees. That means I will collect 38,800. 2. Share. Final call. 38,800. Being final call money received on 9,700 shares. So totally we have made the issues till final call. Now we go to cancel this man's shares. Okay. How do you cancel it? You will say share capital account. This time it is fully called up, but there are only 50 shares of 10 each. Debtor 500. 2. He has not paid the final call of 4 rupees. So 50 into 4, 200 he has not paid, but he has paid the balance 6 rupees. Forfeited shares account 50 into 6 will give me 300. What do I say? Being forfeiture of 50 shares of Mohan for non-payment of final call. Okay. अभी क्या करना है? We have to pass 2 more entries, right? One is for reissue and other one is for profits transferred. ठीक है? Okay, let's do that. Fine. So let's find out how do we do that. Here, we'll say the next number was 12. Number 12. Okay. What do you say? You will say bank account debtor. What is the amount? How many shares? Look, 100 shares of Ram, 150 shares of Sham, and then 50 shares of Mohan into 9. Because we are told that they were reissued at 9 each, 150, 100 and 50, 9 each. Okay. So that would be 300 into 9, 2,700. Forfeited shares account is the next debit, 300. How? There are 100 and there are 300 shares on which we are making a loss of 1 per share. 2 share capital, है ना? To share capital account 3,000. ठीक है? This is being reissue of 300 forfeited shares at 9 per share. And the last entry, this is forfeited shares account debtor to capital reserve. Whatever profit you have made, okay, will now be transferred to capital reserve account. What is the amount? I'll write the narration being profit on reissue of forfeited shares. How do I calculate this? One way is to look back at all the forfeited entries and find the balancing figure. But the simpler way, देखो, Ram paid you, okay, paid. He paid only application money. Sham, he paid you 3, application plus allotment. And then there is this Mohan. Mohan paid you 6 rupees. He did not pay the first call. What is the loss? 1 rupee per share. So what is the profit you're making? 0. Here 2. Here 5. Here it is 0, so doesn't matter. There were 100 shares, but doesn't matter. 0 into 100 is 0. This one was 150 shares. This one is 50 shares. So 300 plus. This is 250. Therefore, 550 is going to be transferred to capital reserve. Once more, Ram had paid 1 rupee application money. His shares are forfeited, reissued at 1 rupee loss. No profit, no loss. Sham had paid 1 rupee on application plus 2 rupee on allotment. He paid 3. 1 rupee loss on the reissue. 2 rupees is the profit. How many shares he had? 150. So the profit there is 300. Mohan, he paid 1 rupee on application, 2 rupees on allotment, 3 rupees on first call. He paid 6. And the loss we made on his shares, again 1 rupee discount. So 5. How many shares were there? 50. 250. 300 plus 250 is equal to 550, which I have recorded here. 10 entries, 13 entries were to be made. This question came for 10 marks. The only mistake students did was they didn't forfeit immediately. They missed out that. So don't get things for granted. You have to read each line carefully. An auditor, a chartered accountant has to have an eye for details. And I'm sure you'll get it only by practice, practice, practice. Next. So are you ready for the next sum? Can we do the next sum? Yes? Let's do it. Let's look at the latest question paper. I'm talking about the September 2025 exam paper for the issue and forfeiture of shares. And that is quite a sum. Let's go on. ABC Limited has issued 1,20,000 equity shares of 10 each at a premium of 2 per share for public subscription payable as follows. On application, 2 per share. On allotment, 5 per share, which includes the premium. On first call, 2 per share. On second call and final call, 3 per share. Applications have been received for 1,80,000 shares. Allotment has been made pro rata to all the applicants for 1,44,000 shares. The remaining applications being refused. T, to whom 4,800 shares were allotted, failed to pay the allotment money and the first call money, and his shares have been forfeited. After the second and final call has been made, N, to whom 6 shares have been allotted, also failed to pay the 2 calls. His shares have been also forfeited. Subsequently, out of these forfeited shares, 7,800 shares, including all of T's shares, were reissued to P as fully paid at 8 per share, show JE and cash book. Now, what is unusual in this question? Show cash book. That means all those journal entries which have bank account in them will appear in the cash book, and the non-bank entries will come in the journal. Okay? You don't have to combine them. So be careful of this part. Whenever they say show the entries in the cash book, the non-cash entries will come in the journal. Those which have got bank will go to the cash book. Okay? So let's look at this question. The issue price per share is 10 plus 2. Okay? What is the issue price? Issue price 10 plus 2. How do you want to collect it? It is 2 on application, 5 which is 3 plus 2 on allotment, plus 2 on first call, plus 3 on final call. Okay? Then we got applications received for 1,80,000. We got 1,80,000. We asked for 1,20,000. Okay? Pro rata allotment 1,44,000. So what was refunded, refused is for 36. Okay. So pro rata allotment, 144 applied, 120 were allotted. Okay, 144 applied, so 120 were allotted. Therefore, 24,000 were adjusted. Refuse 36,000, adjusted 24,000. Okay. So what do you do first? Our first entry normally would have been bank account letter to share application. Bank account here, so it will go to the cash book. Okay. So I will put this in the cash book. 1,80,000 into 2, 3,60,000 will come in the cash book. Fine. It's like this. To share application account, cash book with the bank columns only, date columns not required, 3,60,000. Okay? 1,80,000 into 2. The next entry is to transfer the money to share capital. But let's analyze it. Our applications were received for 1,80,000 shares. That means we got 3,60,000. We made a pro rata allotment on 1,44,000. 1,88,000 was used. Therefore, 36 is extra, which was refunded. 72,000 was refunded. Okay? This is refund. It will come in the cash book. 1,44,000 were given 1,20,000. That means rupees 2,88,000 were adjusted against 2,40,000. So this is the amount which is taken from application. Okay? Adjusted to allotment. This is adjusted to allotment dues 48,000. Clear? I've already explained this. Good. Therefore, I will refund the excess application money, 72,000 I will say, buy share application account. I just calculated that here. No? 72,000. Okay? Then, journal entry. You will say, share application account debtor 288. How did I get this 288? I said application money received was 3,60,000, out of which 72,000 was refunded. So 3,60,000 minus 72,000. This is 3,60,000 minus 72,000. What remained is 288. This one. Then, to share capital, obviously it is 120 shares issued into 2 per share that was due for application. And then, adjusted, 48,000 has been adjusted. I explained it here. 288 minus 240, 48,000. 144 minus 120. 144 is the pro rata adjusted. 120 is the number of shares issued. So 24,000 into 2, 48,000. That is where I get 2 share allotment 48,000. I'll repeat the entry again. Share application account debtor 2,88,000 to share capital 2,40,000 to share allotment 48,000 being application money transferred and excess application money adjusted to allotment. Okay? Good. Next. Share allotment money is due on 1,20,000 shares at 5 per share. Therefore, this is the non-cash entry, allotment money due, share allotment account debtor 6 lakh. To share capital, this will be 120 into 3, 3 lakh 60. And the premium of 2 rupees per share, 1 lakh 20 into 2, 2 lakh 40. Therefore, share allotment account data. To share capital, to securities premium. Cool? Good? Let's move on. What is the money you will receive? Let's analyze that. The total allotment dues on 1,20,000 shares is 6 lakh. At the time of application, we got extra money 48,000. Therefore, the net allotment dues is 6 lakh minus 48,000, 5 lakh 50,000. This is the net allotment due. Then, less allotment arrears of D, 22,080. How did you get the allotment arrears of D? Mr. T, that is, sorry, this is not D, it is T. Let's find out. Look, the number of shares allotted to him is 4,800. Then, remember the pro rata allotment? 1,44,000 were given 1,20,000. So, how much did he apply for? 4,800 into 1,44,000 by 1,20,000. He applied for 5,760 shares. That means he gave you cash worth 11,520. 5,760 into 2. I'll repeat this. He applied for 4,800. We made a pro rata allotment for 1,44,000 shares to get 1,20,000. That means 1,20,000 is equal to how much? 4,800. Then what was applied for? If the allotment figure was 4, I want to know how many shares were applied for. So I will get 4,800 into 1,44,000 divided by 1,20,000. I get 5,760 shares. I will multiply that into 2. I will get 11,520 rupees. That is what he has paid. But you gave him only 4,800 shares. 4,800 into 2, 9,600. Therefore, the excess application money which was adjusted towards allotment is 1920. Now, his allotment dues on 4,800 shares, that is the number of shares you allotted to him, is 24,000. But if he has already paid 1920, that means all he had to do in allotment is to pay the balance 22,080. This is what is not paid by him. So we are expecting 5,52,000 and he does not pay 22,080. That means the balance we got 529,920. If you can't understand this, there is another alternative way I can tell you how we got this figure. Okay, look, 1,20,000 were supposed to give me 5,52,000. So 1,20,000 minus 4,800. How much did 1,15,200 give you? How did I get this figure? 1,20,000. Who does not pay? Mr. T does not pay. How many shares has he allotted? 4,800 shares. How much did I get? This figure will be 529,920. Okay? Therefore, allotment money received by you is 529,920. Allotment account will have a balance of 11,520. Fine. I'm sorry, 1,920 is the arrears. Now, Let's go to the journal entry. It will be share first call account data. This is for share first call due. Share first call account data to share capital 2 lakh 40, 1 lakh 20 into 2. When we get the money, 2 lakh 40, but he will not pay on his 4,800 shares. So we will get, N also does not pay on the first call 12,000 rupees. So what we collect in the first call is only 242,400. We have T who's holding 4,800 shares. We have N who's holding 6,000 shares. So we will collect 2,42,400. Therefore, my cash book entry will say 242,400 for first call, 3,63,600 for second call. Okay. Now, look at the forfeiture entry. There are two types of shares. One is of T, one is of N. Totally 10,800 shares into 10, 1,08,000. Securities premium account. We will debit premium account only when the premium money is not received. So 9,600. Then to share allotment. 22,000 was the pending money from T. We already calculated, isn't it? The total money payable was 4,800 into 5 minus 1,920 excess adjusted. Therefore, 22,080 was the allotment arrears only of T. First call both T and N 6,000 plus 4,800 into 2. Second call 6,000 plus 4,800 into 3. And this is the forfeited shares. This is the amount confiscated from both N and T. How do you get this? Very easy, no? 22,080 was pending. He paid 11,960 to Mr. T. N did not pay 5 rupees. So he paid 5 rupees on 60,000. Therefore, that is our forfeiture amount. Now we will reissue the forfeited shares. We are not reissuing all, we are reissuing only 7,800 shares, forfeited shares for 8 per share. We will get 62,400. That is our balancing figure. So final balancing figure of the cash book is this. This is the final answer for your cash book. Okay. How do I calculate the profit on reissue? The amount forfeited from T was 11,520. Mr. N did not pay 2 plus 3, first call and final call, but he paid 5 rupees on 6,000 shares. The number of shares forfeited is 4,800 and 6,000. That is 2.40. 11,520 minus 4,800 is equal to 2.40. And then 30,000 divided by 6,000 is 5 rupees per share. A 10 rupee share is issued for 8 rupees, so the loss per share is 2 rupees. So here the profit is 40 paisa per share, there the profit is 3,000 per share. We have totally issued 7,800 shares and the whole of Mr. T. That means 4,800 from here and here it will be 3,000 shares. So 40 paisa into 4,800, 1,920. 3 into 3,000, 9,000. The total profit on reissue will be 10,920. This will be transferred to capital reserve. So the journal entry will be forfeited shares account data to capital reserve. Okay? Quite simple, isn't it? This is what we have learnt in issue and forfeiture of shares. Now let me cover a small point. It is possible that shares can be issued for a consider not for cash, but to acquire assets, to acquire business, etc. Here, what do we do? The journal entries are for bank account, we should say share application to bank, now bank to share application, and share application to share capital. Here, we will debit the asset. Assets are coming in. Amount has to be paid to the vendor. This is for purchase of asset. When we issue the shares, we are issuing vendor debit, credit share capital. If you are going to issue it at a price higher than nominal value, also credit securities premium. Okay, the number of shares issued will depend on the purchase price divided by the issue price per share. If the issue price is nothing but face value plus premium, if any. Let me deal with one example. My example is that AX Limited purchases an asset for 43,56,000. The consideration is met by issuing shares at the face value of 10 at a premium of 10%. So you will divide 43,56,000 by 11. 10 plus 10%, 10 plus 1, 11. You know that the number of shares issued is 39,600. So the journal entry first will be asset account debtor to vendors account 43,56,000, vendors account debtor to share capital 39,60,000, to securities premium 3,96,000. This is how it works. First entry is for the asset purchase, asset account debtor to vendors account, then settle the vendors by saying vendors account debtor to share capital to securities premium. That's all. Now let's discuss the balance sheet of a company. The balance sheet of a company is a vertical balance sheet, not horizontal balance sheet. In a horizontal balance sheet, we had liabilities to your left and assets to your right. But here, it is liabilities on top, assets below. Liabilities are called equity and liabilities. Assets are called assets. The heads on top is particulars. Okay, they will be particulars. Note number. Then here it will be figures for the current reporting period and figures for the previous reporting period. Okay. So every company is supposed to give it like that. As far as liabilities is concerned, it is called equity and liabilities. Assets is called assets. There are four subheads in the liability side. Shareholders funds, reserves and surplus. Okay, the shareholders funds, share application money pending, allotment, long term, that is non-current liabilities, current liabilities. On the asset side, non-current assets, current assets. Okay, now let us look at shareholders funds. There are three items that come in a shareholders funds: share capital, reserves and surplus, money received against share warrants. Okay, don't worry about this money received against share warrants. Very few companies have that. This is for companies formed even before 1956, where bearer shares were allowed to be issued. Now it is legally not allowed. Okay. What comes under non-current liabilities? Four items: LDOL. It's like a disfigured doll. LDOL. Long-term borrowings, deferred tax liability, other non-current liabilities, and long-term provisions. This is your non-current liabilities. And then in current liabilities, stop. STOP, short-term borrowings, trade payables, other current liabilities, short-term provisions. Current liability. Liability, the amount, the obligation is certain. I have to pay. Amount also is certain. It's a liability. Payment is certain, but the amount is estimated. It becomes a provision. Okay. Let's go to the asset side. There are only two subheads in the asset side: non-current assets, current assets. In the non-current assets, there are five items: property, plant and equipment and intangible assets, non-current investments, long-term deferred tax asset, long-term loans and advances, and other non-current assets. In the property, plant and intangibles, I have four subheads. First, property, plant and equipment, we call it fixed assets. Intangibles, then capital work in progress, half done tangible assets or intangible assets under development. This will come on the asset side. Under the head non-current assets, I have so many items. Next, current assets. There are 6 items. How to remember? I can say Commissioner of Income Tax, CIT, is sitting with the Chief Security Officer, CSO. Okay. C, current investments. I, inventories. T, trade receivables. C, cash and cash equivalents. S, short-term loans and advances. O, other current assets. Okay. What is important in this topic? Few things I want you to pay attention to. Okay. That is, forfeited shares balance. What do you do with forfeited shares if all the forfeited shares are not received, not reissued? Then there is a balance. Okay? Balance when all the forfeited shares are not reissued. What do you do with this balance? This is added to paid up capital. Please don't forget that this is added to paid up capital. What do you do with calls in arrears? Calls in arrears, notes to accounts, called up capital. From there, I will say less calls in arrears. I will get paid up capital, which goes to the balance sheet. Okay. Another thing I want you to remember is calls in advance. If you have, where does it appear? It does not appear in the capital. Forfeited shares added to paid capital. Calls in arrears released from called up capital. But calls in advance will be shown under the head current liability. Okay. Under the specific head, other current liabilities. Debentures are shown under long-term borrowing. Okay. Securities premium is shown under reserves and surplus. Capital reserve, profit on reissue of shares, reserves and surplus. This much is enough. Don't go to study too much about balance sheet and P&L statement. P&L statement, रोजी रोटी ये कंपनी का यार, रोटी, ROTE. R, revenue from operations. O, other income. T, total revenue. Expenses. In expenses, 7 items. CPC, EFDO. CPC, EFDO. What is C? Cost of consumables. What is P? Purchase of finished goods. What is C? Change in inventory of finished goods and work in progress. What is E? Employee benefit costs. What is F? Finance cost. What is D? Depreciation and amortization. What is O? Other expenses which are not classified in any of the above 6 items. You'll get profit before tax, less tax, profit after tax. इतना बहुत है. इससे ज़्यादा मगजमारी मत करो. Work out as many sums as you can for issue and forfeited shares. I'm sure you will be able to master it. I hope you enjoyed issue and forfeiture of shares. This is Kiran Vasant signing off from the topic issue and forfeited of shares. All the best.